Aloha and welcome to Java. Thank you for joining me again. This is for Monday, January 29th, 2024. Today we're going to cover mostly what is going on, not just the United States, but also Western Europe. Got a few things coming up here. So with the markets, we've got our main risk indicator, the MMRI, has retraced quite a bit, showing risk has come down for this market. So yesterday we did have a rally close to the close, so pretty much close to record highs. And we're expecting earnings today, so you can see from Microsoft and Google. So looking at stocks currently are in the green. The bulls are in control. However, futures telling a bit of a different story. We watched the 10-year yield and the relative strength of the dollar both drop. So this is letting stocks gain some strength. However, you notice my bull here has some fangs. So we're expecting a little bit of blood in the market today. Should retrace a little bit. This is not financial advice. It's just what it looks like the probabilities are for what's going on. It could continue the rally. However, the 10-year yield and relative strength of the dollar are hitting support levels after their drop yesterday. So that was due to Janet Yellen and Treasury bills. So it's fortunate that I covered those yesterday because that is really what affected the market more than anything yesterday. So, calendar for today, it is Tuesday. We're expecting earnings from Microsoft and Google. We also had UPS is in shipping. So the delivery company came out with a lower outlook and their stock is dropping. So we look to that more than just the company UPS, but also it's kind of an indicator of what's going on in the real economy if people are not shipping goods. So we've got General Motors, GM posted a profit, so they're doing well for right now. That's kind of an outlier in the auto industry. We're watching Tesla is struggling with earnings as well as a good deal of the electric vehicle space. So people are really driving toward, it looks like hybrids mostly. So the one that will come on top of that will win. We've got Toyota came out with basically recalls. I think it is again related to the Takata airbags. So with that recall, that they should have some difficulty with that, but they can recover. But for the short term, it's going to put some pressure on that stock. So in our calendar, we're looking at consumer confidence as well as a jobs report will be huge. Wednesday, we do have the FOMC. So that's going to be a large possible market mover depending on what they say. So we are getting their statement, Chicago PMI, and crude oil inventories along with those job numbers. So very interesting days telling you this so you can set up your trades if you're doing swings by the end of today. So still seeing that soft landing fully achieved for now. As I said, there's a lot of cracks in the underlying market here. We're going to go over some. So this is the Toyota issuing do not drive advisory that I was talking about over the airbags. We've also got Vertex. They have come out with a non-opioid pain drug. So that could be really huge for that one if you're looking for a day trade. So with the economy, the real economy, which is completely disconnected from the stock markets, going over to the Eurozone, they're saying they unexpectedly escaped a recession, but struggles persist. So if we go over to Ireland and look at their GDP, contracted for the fifth quarter at the end of 2023. So they're giving this couple of different reasons. One is the drop in decreases for the different sectors. And the other one is saying that they've still got a strong economy coming in. But their GDP, their real GDP, has dropped. That is the definition of a recession that they're having. We've got also, I want to bring this up, seems like a very small story. However, Zurich's insurance sale of $20 billion, German life insurance, so was basically a no sale. So this insurance is going to remain on the books for some of these banks and the back holders of this. And I think that we're going to see more of this with the insurance issues I've been bringing up and that will cause ripples in the financial market. So, one more instance, and it's quietly happening in the background. So, we've got the big debate now. They're looking between central banks, whether it's going to be the Federal Reserve or the European Central Bank nearing their rate cuts. And investors are asking who's going to cut first. Well, in my opinion, it's going to be the European Central Bank for a couple of reasons. First, they are kind of the lead because they're a smaller scale, if you will, than the Federal Reserve. And we're already watching cracks happen, not just in the UK, but now Ireland uh, showing their GDP contracting. We've got the UK with their job numbers are dropping. So I think they're feeling a bit of pain. They're going to have to make their move first. That's reason number one. The second reason on the flip side is the currency. So if you compare the euro with the US dollar, the euro can't take the hit if the Federal Reserve cuts first. And they talk about this. They talk about this in their meetings. So they are collaborating, and the Federal Reserve will wait until the European Union can cut first. But what they're waiting on is they are now enforcing tight limits on the crypto firms because basically this is going to be their push to roll over to CBDC. So the EU will get the CBDC first, and they're going to be doing these rate cuts. So they're going to kind of play hand in hand. I don't know exactly how they're going to roll out, but that's what I see moving forward. Once that happens, the Federal Reserve can implement cuts. But I also think those may not happen as rapidly as the market thinks. So moving on to our stories, US bank regulators, they have to boost uh, transparency in their merger reviews. So this is basically they're kind of trying to blow the whistle on other banks because some are getting an unfair advantage. For instance, JP Morgan, they're purchasing all of the other assets for pennies on the dollar, growing into these mega banks. So basically, they want a chance at plundering the spoils, if you will. So, another story for the real economy in the United States. This is how they're framing this. So, American Airlines laying off 656 employees to provide elevated customer service. So, it's a contraction. They're trying to save money. All of these companies are going back to what they quote unquote value. So, it's a boost for their company that they are laying off. So, more job cuts on the horizon. So, a couple more stories. We've got EU pledging to spend billions on a trade route. They're trying to bypass Russia. So, talking about basically going by rail for a lot of their goods and still ongoing with the sanctioning. But the truth is, told in this story basically, that the European bloc, their access to cheap Russian energy is really what is driving their growth in GDP. So, they cannot abandon Russia completely as much as they would like to. So, just a couple of things back to the United States again. US arms exports hit record high in fiscal 2023. So, I was talking about this before when they come out with the GDP and they're talking about how the United States is doing so well. It's in arms weapons, and these don't translate to really giving back or any kind of real trade, perhaps in the black market, if you will. But when we do arms exports, those are included in the GDP. It's not a true growth. So it doesn't translate to the same thing as if we were manufacturing, for instance, vehicles, exporting and selling those. So I've got another story coming in here. This is just coming in as I'm doing this. They're talking about another missile fired at American warship. And so after last evening where there was an attack on US troops, this could escalate things. And we know they're driving toward more war, particularly trying to draw in Iran. So we'll keep an eye on what they're doing with this. But in the meantime, back at home, looks like it could be a very good trading day. We'll move to volatile toward the end of the day, particularly the last hour when volume picks up in trading. So just be careful, manage your trades. I wish you all a green trading day, wonderful day in general. Until I see you again, my friends, stay free.